Today, we're talking all about the options chain here inside Interactive Brokers. Let's start with firstly, how to put this into your actual trading platform if you don't have it already. Assuming that this isn't here and it's gone, it's disappeared and vanished right there. There's an empty space, right? We want to go ahead and add that options chain in. First thing that we want to do is go here with the little lock button, unlocks with the green line appears around the outside of our options trading platform. New window, options chain right there. If it's there or not, you can just search option chain. Resize this bad boy in here like this. And yes, we are starting slow with the easy kind of basic tips. We're going to dial it up and dial up blitz later on this video, give you some crazy informative tips to hopefully supersize and speed up your trading with some cool features that this thing can do. Save that change right there. And then you're in here. We have our options chain back in action. Pop this bad boy out here with this plus sign, and it's going to go full screen for you. That will give you the best possible view. I'm going to minimize myself. You don't want to be looking at me. You want to be looking at this options chain down here, get you the best possible view for this right here. There we go. I'm minimized now. So now let's look to link this so that these numbers here and this stock up in the right-hand corner will always mirror what you are looking at when you're going through your watch list. You'll see as I click here to another stock like Amazon, the options chain, all the values and tabs, they all change to the Amazon stock. You want to always be linked on. There's very few reasons why you wouldn't want this to be linked. And this all comes down to this little chain right there. The green chain right now, it is all the groupings of Interactive Brokers. If I go to the red group, now, when I click different stocks, go to Apple, Accenture, you can see that the chart's going to change, your order entry is going to change, but your options chain in here is going to stay the same. Make sure you have this toggled on to the same grouping that everything else is. In this case, it's green, it's green, it's green, green to go, green for cash. You're good to go right there. Make sure you lock that up. As you can probably guess, there's an easy way to change your stocks. When this is linked, you can just click on them in your watch list or your portfolio as well. It's going to update, and just wherever you click on, it's going to pull into here. But you can also come in here if you want to change it from the options here. Let's say you're doing some deep dives into this data and this is popped open. You don't have the option to click through any other companies. This little drop down area here has some of the latest tickers that you were trading before you kind of jumped in here. If you want to go to the SPY, if you want to go into something completely different, you can do that. Wait till this loads. All the data is in there. Then you can go to something else. You just go, I want to look at Nike. Type in NKE, Nike, boom, and it all auto-populate that way as well. So you can do that from here or by clicking different stocks in your watch list or your portfolio. I'm going to flick it back to Apple right now because I like to use them as an example because, well, I think they're awesome. Let's get back into it. Along the top left-hand side here, if you push this down, it's going to be right in the same area there. We're just going to expand it out again and show you the expiration dates. These are the dates that the contracts that you buy or sell with your options trading, these are the contract expiration dates, the time they're going to be good for. So right now you can see that there's a 1 day, an 8 day, 15, 22, but there's also more. And if you click through these, you'll see again that the options data in here changes for the bid ask, the delta, all the stuff we're going to get to later on in this video, plus some other really cool tips. Make sure you stay tuned. So we go to 15 days, that changes again. We go to 22 days, same thing. You can click on more and you can go out in time and see a whole whack of different expiration dates all the way into 2024 and 2025 in this example. December 19th, 2025. That is a long way away. And these numbers will be reflective of that in terms of the cost to buy or sell the options if you were to choose an expiration date 834 days in the future. Now, if you don't have the weeklies and quarterlies checked on at the bottom, this is going to drastically impact what your options chain looks like in terms of expiration dates. So with that on, all you get is the third Friday of the month. That is the kind of monthly expiration dates for every stock. And you can go 8, 43, 71, 99, and then just it's a higher scale. But you want the granular details. You want to get into the weeklies and the quarterlies. You want to put this little checkbox on, and you want to be able to see all these different expiration dates as you go. And you can see that the closer we are to like the trading date that we're at now, the more options we have for expiration dates. And then the further out in time we go, past November, we're into those kind of monthly expiration dates again. So the weeklies only come out in advance, like a month or two ahead of time. But you can select them as long as you have the weeklies, quarterlies toggled on. Then you can kind of fine tune your options trading based on the expiration dates that you choose. They're at the top. Next up, we have what's known as the strike here in the middle. And this column, all these numbers right here, is the agreed upon price that you can either buy or sell a contract at for any given expiration date. Now, these strikes will be pretty consistent if you go out to different expiration dates. They're going to be pretty much the same all the time. When you get closer to the current trading day is where they might kind of differ and kind of go a little bit thinner or kind of tighter. The range you get, you can see the 0.5s here, the 2.5s in terms of the trading days. And even here, 8 days out, 15 days out, still have them. 22 days out, now they're back to solid increments of 5. But these, again, are just the contract values you're going to agree to either buy or sell shares of stock at 170, 175, 180. You can see the current price of Apple up here in the top corner, 177.99. That is reflected in the strike area here. This very dark blue area, 180, 175, that's what's known as at the money, because it's right at that 177 and change stock price. So those are highlighted dark blue for you, and they go out and kind of get a little bit lighter as you go further out of the money, lower and higher from the current stock price. Now, you can toggle this by clicking the strike. It's going to go and populate and just flip it from low on the bottom to high up top. You can kind of scroll up and down to see the full range. If you want the highest numbers to be at the top, you probably want to click that once and have the high numbers up here. If you want the low numbers at the top, click it again and it'll sort for you and put the low numbers, low strikes up at the top. If you don't see all of these, it could be because you don't have the all strikes turned on right here for your options chain. You want to have all there. If you click on 4, let's say, it's going to be very limited and give you a very different picture compared to putting on 6 or 8 or 10. Or you can even search it by standard deviation, which is going to give you a range of strike prices based on 2.5 standard deviations, let's say, of the stock price. Again, kind of interpreted by those ranges here. The dark blue is 1 standard deviation. I think the lighter blue is 1.5, 2, and then 2.5, anything outside of that. So you can do it that way as well, but you want to click on all in most scenarios to have all the strike prices so you can see all the options data in your trading options chain. If the day ever came where you didn't want to see all these, you want to see select strike prices that you were looking at, you go to here, all strikes again. You could uncheck this box right here and select certain numbers of strikes, maybe with 200 and the 190. You can have that and close, and that'll update and give you the numbers just for those specific strike prices as well, if you want to tailor your trading to those strikes. I'm going to click these all on again, click, click, boom, boom, all strikes, close, and put them back here like they're supposed to be. Now, you have the calls on one side, the left side here, the call options on the left side. You have the put options on the right side. You can buy and sell calls. You can buy and sell puts. Everything that governs this is known as the bid-ask spread right here. So right at this 175 area, right near the money right now, we've got 281, 293 is the bid-ask spread. Those are just the numbers. If you're selling, you want to be getting paid the maximum amount for these areas. So you're looking at the ask column on the put side. On the call side, if you're selling, again, you want to be on the ask column because you want to have the most bang for your buck coming in. If you're buying options, you're in the bid column. You want to buy as cheaply as possible. So you'd be on the $6 area right here. And on the put side, you'd be at the 281. The bid and ask is just the area where trades get done, the kind of the current going market price for each strike price with given this expiration date. If you want to go make a trade, and let's say you want to buy a put option, eventually you'll get in here to your order entry. You'd buy, just to illustrate this, and you'd have somewhere known as the middle or mid, which would be in between 281 and 293 for this example, somewhere around 287 or 286 to get your order filled. If you want to toggle the calls and puts on or off, you can do this by clicking on this little put call area right here. You can click on just the calls. If you're just looking to buy calls, you don't need to see the puts. You can just do all call data. Again, changing your expiration date will change this information right here and give you different kind of numbers to look at as you go further or closer out in time. If you want to go just puts, same thing, click on just puts. And you can click on puts and calls again to make the information come and have that nice tab down the middle. If you don't want to have this tab view, Interactive Brokers does offer you a tabbed alternative to a list view, which is a little bit different and a little bit kind of, in my opinion, harder to use. You get the same kind of information, but your expiration date is now in the middle on top of your strike, and you have to click in here to get a different expiration date and close and open them to go through, and you can open whichever ones you want, scaling through. Normally, I leave it as a tab view, but you can explore the list view if you want to do so. So that's the basic stuff. Like this video if you got some value for that first part. Now we're diving into the good stuff, kind of the things you don't really hear about or see in your options trading. If you go into this little gear icon right here, maybe you want to see some different kind of columns right here, the delta, the theta, the ask, different things, volume, open interest. You want to see those kind of different charts. So to configure this layout, what we can do is go to this little gear icon up here, settings, and just like any part of Interactive Brokers TWS, you can go to the layout section down here for the options chain layout. And now you can go ahead and add and remove different pieces of your trading columns. If I have the delta in there now, I want to take it out, I can remove it. It's gone down here into the Greeks. If you understand and know where you want to kind of go and kind of pick things from, you can open these up. You can pick different things. They're not all going to show up. For example, your dividends probably aren't going to show up in your options chain. We'll put them on to see. I'm going to go back in and add that delta back in. Again, you just click on here, click the add button. You can actually reposition these and move them around. I can click this delta here and move it up. I can put ask size up or down, right? Just using those arrows right there. Then I can click apply. and that will apply the changes to my options chain. You can see how the information loads in here. The dividends don't actually show up because that's more of a stock metric versus an options chain. Not all of these things are going to show up in here. You can play with the ones you want to see and generally lay it out the way you want to. But a lot of this, again, remove that just because it is a stock metric, not an option. Stocks have dividends. Option contracts don't have dividends. If you're not a big fan of the color blue here in the middle, to make it a little bit more easy to distinguish from the at the money, in the money, out of the money, you can change these values in here to be different colors by clicking on that gear icon again, settings, going the color stream in here and going blue to grayscale. Let's apply that and just cancel this. It's going to go straight gray. If you're a little bit colorblind, that may be good for you. If you want to go a little bit more to the colorful poppy side, we're going to go fall. Fall colors doesn't love fall colors. We're going to go in here and just say green is at the money. Yellow is getting a little bit more further away from the money. And then you've got red out of the money here. It gives you a nice kind of contrast. And our data will load in there if we just refresh the kind of tab by going to different expiration dates at the top. When you are in here and the delta is in here, the delta is the rate of change for the contract price given a $1 move in the underlying or the stock price at 178 for Apple. If that price moves down by $1, this option contract value is going to decrease by 39 cents. So it's going to go from, let's call it 410 down 39 cents. So it's going to go down to about my math isn't so great right now, 370 right there, okay, on the delta if it goes down. If it goes up again by $1 to 179, this contract can go from 410, it's going to go up 39 cents, it's going to go up to 450 right about there. The delta works the exact same way on the call side as well. If this contract here is valued at 7.8, that's the bid ask again. We're to look at the contract value, which is the bid ask basically. 7.8 goes up by 62 cents, let's call it, for every dollar that Apple goes up. So this goes from 178 to 179. This goes up 62 cents because the delta from 780 to it's going to be 842. That's going to work. And if it goes down $1, stock price, again, the stock price of Apple, this is going to go from 780 down to 720, let's say, just to be rough with the math right there. That's going to move the options contract price in the options chain as the stock price moves. These are going to be floating around all day long as you go and as the stock price moves. It's going to change and update throughout the day. Theta is one of the Greeks as well, known for time decay. So as time goes by, every day that goes by, this contract value is going to tick down further by 8 cents. That's going to happen no matter what. As you get closer to the expiration date, every day that goes by, this is going to tick down by 8 cents. So the first day, it's going to go from 780 to 772. Assuming the stock price doesn't move and the delta doesn't do anything, it's going to keep ticking away. Same over here. It's going to go down by 5 cents from 410 to 405 every day that goes by. That's the same for buyers and sellers. Sellers want the theta to work. Buyers don't want theta to work, but unfortunately, you can't stop it. It's part of the options world. Then we've got bid size and ask size. That's just the amount of contracts currently being bid and asked. They haven't been made yet. They're not official yet. They're the kind of outstanding offers on the table to kind of get those contracts done. Volume right there. Volume is the number of contracts that were traded that current trading day. That means open or closed. And open interest here, OPTN, option open interest, is the amount of outstanding contracts that are currently open outside of kind of deals that have closed this particular trading day. So total cumulative, these could have been open back 3 weeks ago, 4 weeks ago, and they still haven't closed yet. They're still open for the calls and the puts at every single strike price. You can see there's a bunch of action, a bunch of open contracts. And the further you get away from the stock price here around that 180, 175 area, because we're at 178, the kind of generally the less action there's going to be the further you get away. That's the general trend, but you can see that sometimes that's not always the case on the put side. Now, if you're a little bit more familiar with options, you're a little bit further along, you may want the delta, you may want the theta, you may want some other Greeks in here as well. We go to that configure and kind of add in what's known as the Vega. We can go into the Greeks. Let's look for Vega, boom, boom, throw that in there and move it up to the other Greeks right there. Let's apply and go okay. And the Vega is another way to measure the change in the options contract. And just reload this so it pops in there with the bid ask. There you go. If the contract's at 410 and the Vega is at 23.6, so for every percentage drop in volatility, this is going to impact your options price basically right here. So this is going to go down from 410 to about 390-ish if volatility drops. Okay, if volatility rises, same thing's going to happen. Go up by about 23 cents up to about 430. That's how it works for Vega in here. So Vega's measure volatility for the options contract. Same for the put. Same for the call, the same values pretty much across the board. It might be a little bit different, slightly off, but very, very similar based on volatility for the stock. And you can actually see how volatile the stock itself is right here in the IV. So the IV for each stock is shown in the IV area. You can see 22.5% is very kind of mid-range or average, I'd say. You have some that are about 50%, 90%, 100%, some lower than this, about 6%. It just depends on the stock, depends how kind of regular the stock price jumps up and down and all around. So the IV right there, generally, the further you go out in time, the higher the IV should be. When you don't have that, okay, let's go back to September 15th. We've got an IV of 26.2. So if I go from September 15th to the September 22nd, this should go up. The IV should go up because you're going out in time. And basically, when you go out in time, it means that there is more likelihood that something could happen to move the stock in one way or another. So that should be included in the volatility of the stock. 26.2 to 24.5. So there's something in this week right here, September 15th, where it's kind of giving Apple a bit of a boost right here in the volatility for that week. And that could be any one of the days during this trading week. And I happen to believe that that is the week that Apple has used their kind of Apple or iPhone day with at least a lot of new products. And there's a big conference that day. So the investors will be watching that day with keen eyes, which was why there's a heightened sense of volatility right there in terms of where this is next day. It kind of drops off. You see down, it goes 24.5. Let's see if it jumps up next week. Goes down again. So there's a lot of volatility, both those weeks right there baked in. If we go up to the October 6th, we keep dropping again, and we keep dropping again. So in this case, actually, we keep dropping. There's volatility baked in again for a long kind of stretch there, for like a month-long stretch for Apple. And it doesn't actually go up from week to week until you get to October 20th to the 27th. It starts ticking back upwards to 23. And then again, 27th, same thing. And then 24, it starts ticking back up the way it's supposed to. So this kind of phenomenon where there's more volatility and it's going down instead of up is known as backwardation. And backwardation, again, just means there's something built into this timeline right here where there's either earnings or a big kind of company news day or some kind of financial event, maybe an interest rate announcement from the Federal Reserve of the US, where this is going to impact the options pricing, which means that it's going to be more expensive for buyers in this area, and it's going to be more profit in the pockets for sellers. Plus, these Vega numbers for the volatility impact is going to be higher during these areas of high volatility as well. Just going to throw you over to another stock to show you. If you look at something like a Tesla, the volatility is going to be way higher than 24. Okay. And that's going to respond by making the options. It's over double, right? It's 44% for 15 days away. And you can see that it's kind of the same area there going out in time, 43, 47. So it's going up, 51. That's how it's supposed to work right there, showing you it goes higher as you go out in time because there's more time. And there's probably something in October, maybe earnings announcement or something where the volatility kind of starts to go down again after that. But you can see that the premiums are much higher for a stock that really isn't much further ahead than Apple in terms of stock price. I mean, it's 180 versus 250. So there's a higher number there. But in terms of the options bid and ask in here, it's it's 3 times more than the 250 right here. If Apple's is 3 times more, let's take a look. When I say 3 times more, I just mean the bid-ask spread is 3 times ahead of 250. If you went 250 times 3, you get about 750. So this should be about 750 in here. It's about 790. So it's above 3 times, a 3x multiplier on that one. Let's go Apple and see the same thing. Let's see where it's at. Going out 15 days again, this 177. If we did that by 3, we should be at 307 times 3 is 21. So 500 roughly. And we're way below that. We're about a 2x right there because the volatility is different and less in Apple because it's a more stable company compared to a Tesla. So that's what volatility means. That's what backwardation is. Make sure you understand those when you're trading options because they can impact your trading strategy and your returns greatly if you don't understand how they work with volatility. Hopefully that lesson there was valuable to you. If it was, consider subscribing to the channel. I've got a lot of videos just like this around options trading and interactive brokers in general. Now let's hop into the strategy builder right here, which is kind of the most powerful tool if you're kind of a combo trader looking to do different things in the options trading world. You can open this little guy up by clicking on this little button down here, on and off. And then if you go ahead and you now click on an option, let's go, I want to go ahead and sell a put down here, a 175 put, let's say, just for example, I want to sell that leg. If I want to buy a leg below that, I can do that. It's going to populate in here. It's going to show you what you're doing. If I have a negative 178 right there credit, it's going to actually populate what kind of strategy you're using in here in the strategy builder. Obviously, that's the name what it's for. It's going to show you what you're doing. I've got a bull put on right there. If you kind of take a leg out and you can go back and you can do something different. Let's say I do this again and I want to add a little bit different kind of feel to it. I want to go to the other side and add some calls. This as well, sell and buy. It's going to keep populating these all the way until you kind of run out of room where you stop your trade or kind of make it what you want it to be. I go to limit price. Let's go in here. This should update to an iron condor. I don't know why it isn't right now, but that's what it should be. But you can also remove these legs and it's going to update. If I take the puts away, it's going to change into a bear call. And as I select my limit price in here, this is actually going to populate for you in the trading day when the trading market is open. It's going to update here based on the bid-ask spread for the credit or debit that you're going to get for the option strategy that you're using. So you can do that. You can filter around the strategy builder. You can actually go ahead and just say, I want to buy and sell on different kind of weekly expirations. You can do that too. You can buy different ones and you can just put them in all at the same time and just go ahead and get your strategy in there, whatever you want to do. You can kind of build it out the way you want to based on your strategy. For you advanced options trader, this is a great tool to have in your arsenal because you can use it and build in different kind of trades to profit from things like volatility for market kind of setups that you see, strangles, iron condor, spreads, bear calls, bull puts, whatever you want to do, spreads. You can do it all in here in the strategy builder. That's a section to get it done. One cool thing to do if you want to be able to trade from your options chain, you can turn strategy builder on, because if you don't, and I want to buy this call option, it's going to populate in your order entry up here. And you have to go through that way to do it. If I have strategy builder on, it can actually populate down here and I can clear these legs out and just make sure I buy the one I want to buy. If I want to buy this put here, September 29th, 22 days away, 330 is going to cost me for a 180 put. I can actually go down here into strategy builder. It's going to show me my debit in this account because I'm buying. It's going to show I'm going to decrease my account by 330. I can change the order type down here. I can change the limit, the order entry, all that stuff can be changed in here. And I can go ahead and then go to advanced, and I can actually go to margin performance and see a preview of how this is going to work out for myself, my profit probability, my max loss, my percentage chance of that loss happening, where I need the stock to go in terms of what is going to happen. If the stock moves up higher, I'm going to make a lot of money. If it doesn't, I'm going to lose my cap 330 loss. It's going to show me my equity with loan, margin, maintenance margin, all those different numbers, how they change when I go from current to post-trade. That's what you want to look at right there. If you want to transmit, you can trade right from your options chain, in fact, versus going through your order entry tab as the alternative. So let's close this out and submit this trade. You go down here, go to advanced again to submit the trade. You can go submit. That is putting your order in the hopper. If we close this down, we'll see in our order area, we now have a buy order down here for buy limit one order right there, 330 of Apple, September 23rd call option. That's how you trade from the options chain inside of Interactive Brokers. So there you go. You're an options master right now. You have everything you need to know to trade from the chart in Interactive Brokers, how it works, how to modify it, how to set it up, what all this stuff means in here. If you want to know more about options trading in general, how puts work, how calls work, when to sell, when not to sell, when to buy, different strategies like that, make sure you check out my course at tradingoptionsdaily.com/options-academy. And if you want to know more about how to actually execute trades inside of Interactive Brokers and the different order types you can use to get there, make sure you check this out right here.